day all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Tuesday, the 1st of February, 2022. We have an event in charts that's taken place. You have established trade bottoms in a number of the charts we're going to look at. The question is, does it turn bullish, or is this just a market that's rallying in the key moving averages? And you're going to see about 95% of the charts I'm going to show you are just rallying back in the key averages, and now we have to see, do they get legs from there, or is this a rally that fizzles and then starts down again? Most are out of their downtrends. The question is, can they hold an uptrend? Let's take a look at Bank of America. The overall picture is you got up over 50, dropped back to 42 and a fraction, and now you're sitting here at the 46.94 level. But with today's action, if I take this away, just so you get a feel for it, if I take all that away, you had lower highs, lower lows. Over the past 2 days, you come up like this, and now that you cleared this high, you now have a pattern of higher lows, higher highs. You're back into bullish action on the chart. The risk is to not take out 44.45. Look at the resistance on the 18-day average. What the market did was pretty simple. It got itself down into the 200-day average, found some support right there. Now, with that support was the Bollinger Band. You see that? From there, it rallied back up, fell back to support. Once it went through on the way up, the 100-day average like it didn't exist, came back and said, oh yeah, the support's there, and now it's challenging the next number. Going home, that's the key to it. Going home, you have in this chart, momentum is up, the bias is up since you're over the 18-day average, and the trend is up. Admittedly, you're just fighting your battle right now at that 18-day average. I see it. Can it go anywhere from there is the question. If it gets legs to it, 50. But to get to 50, you have to make new highs on the move. That's doubtful under the current environment. Not saying it can't happen, but this is more of a market that's a relief rally than it is something saying, hey, I'm going to mount an attack and go to 50. We'll see. It could happen. Apple, strong as can be, but getting very overbought. It, too, found the combination of a major moving average, the 100, and the Bollinger Band, and it, too, went into this pattern. Does this look familiar? We just looked at it in Bank of America. And from there, the market's trying to mount its assault to the upside. Will it be able to get to the Bollinger Band? To get there means you're going to make this new high. Is this the time frame it's going to do it, or does it need to consolidate it? That's the big question. Bullish, yes, but where would you buy for a reasonable risk? If you buy at 168.62, you got a big risk down here all the way into the 156 area. I think that's a little too rich to take on. XLF, the same story. You found your support. If you look back at the 200-day average in the Bollinger Band, then you started fighting between the bands, and now you've pumped up to the 18. Does this mean it's ready to rock and roll? I got my doubts. I mean, there's reasons to not be short on everything I just showed you, but are there reasons to go long at the current numbers? The big question. Disney, still very much in short covering, changed its pattern, and I can show that. Lower highs, lower lows, and then zoom, the bottom falls out. Now, if you take this out right here, you break the pattern. Suddenly you have higher lows, higher highs, and the market is like a magnet being drawn. What number do you think? I think it can run to, and then air come out of it for a bit. 18-day average of closes. In Meta Platforms, Facebook, this crazy name that they came up with, you're right at the resistance. So let's assume, because the market's just getting its momentum going, it gets a piece of good news. And it's not looking bad on earnings and other parts. This is your next resistance part up here. But to get long here at 317, you have to put a stop in under, I think, the 295 area. That's an awful big risk. As a chartist, I don't like that. Then we get to XLI, the industrial sector. Well, big time convergence of resistance. The 100-day, 200, and 18-day average of closes, all three coming in starting at 103.24. That is your resistance point. Now, to get to them, the last rally high was 102.49. That means you end the downtrend because you still have the lower high, lower low pattern. Can it do it? We'll find out in the morning. But even if it does, you need to close over the 103.24 area to get the market, what? Upside bias. But nothing on this pattern so far can turn it into higher highs, higher lows. It's more of a relief rally than it is the start of something new just yet. In XSD, the semiconductor. So we got up today to 206.45. We take out this high. So now we can make an argument you've broken the pattern of the lower high, lower low, the washout ended. You also have a market that, if you look right through here, loses the embedded reading right here. The question is that the target? Because it could be. It might have just finished on it when it did it. Or does it reach up for wherever the 18-day average is? Beyond that, that's all I'm looking for. So this is the end of a break. Is it the beginning of something else becomes the question. The home builders. Home builders, just, you can see the convergence here, but there's a lot of bearish action here. You still have the 100-day, the 18, the 200. That's a whole resistance zone in the market. You lost the embedded reading right here. Embedded readings are just so important. And when you lose it, it's like a magnet. Now the question is, in theory, my theory, that is, I think you should go to those closest of the main moving averages. So I'm targeting 76.38. To get there, you break this whole pattern. Break the pattern, and it's Johnny come lately to the party, but it's saying, that big break that we had, that's over. What is next? And that's where we're at. This is a what is next going to develop. That's where you're at. Some markets are telling you, energy's powerful as can be. Right back to the upper Bollinger Band, holding on here. When we were down like this, I said, hey, folks, this market's, and this one we were yesterday, I said, it is still targeting. Go to yesterday's video, the upper Bollinger Band. I think the pros took some money off the table. They get their ammunition ready. Tomorrow we get the OPEC Plus meeting. I think they're going to say they want to produce more oil, but you do know they have a big problem. They're not producing what they said they can produce. They've run out of capacity for the moment. Those that can produce aren't making up the shortfalls of those that are having their own internal problems. Think of Libya if you want an example on it. In gold, you've gone from an upper to a lower band. I've seen this play before. You get exhausted, and this is where you lose money in trades. There's nothing to do. You took the bulls out of the game. Now the bears, to beat them up, are probably short covering, but nobody's saying what to do next just yet. You're too oversold, in my opinion, at least, to attract new short selling, and there's no reason to be long. In GDX, the story's different. The trend is down. You've got to your lower number. You're getting a bounce. I think in this area right here, you're going to attract some short selling. Let's see. To negate that whole story, at the current pattern, you'd have to take out 31.89. Next, when we get to XME, the miners, as I said yesterday, when we were down here, I said, watch. You're going to see a convergence of all these moving averages. Guess what's happening? And it's going to converge even more tomorrow. And you're going to have a lot of resistance from 44.40 right down to 43.78. Got it? That's where these numbers are all going to come in, so you're knocking on it. If you get through it, what it really does on the chart, it takes you out of the bearishness, but it doesn't push you into the bullishness just yet. Copper. I've said, expect a break, but also, I don't think this market's going to die on you. See, I'm of the belief that copper is your canary in the mine. And it's going to tell you if industry can come back. If industry comes back via China, 50% of the world consumption, that's going to be a pretty good thing. Now, we know China has slowed down dramatically, but at the same time, they're trying to turn on the spigot. They've done a 180-degree turn on their ideas about their property companies. Even Evergrande, they're selling a monster piece of property, and suddenly they're saying, well, some of those proceeds have to go to bondholders abroad. So they're not abandoning everything. They do things their own way. They have their own set of rules. But at the end of the day, if you want foreign investment, you have a doorway. If you shut that doorway on it, it doesn't open so easy again. There's nobody's fools. They're smart people, but they play by a different set of rules. It's whatever they want to do. It's one man running the country for all purposes. And You look at the market, 38.68. We'll see what happens as it gets there. Should you clear 39.29, then you just say, we have the noise of the market. That's what I'm really looking for. TLT and the BNDs and the other AGGs that you're looking at, they're falling again because interest rates are falling. They're not going up right now. The press would have you think interest rates we're going at 2%, 2.5% right now. You're back down from 1.85 in the 10-year to 1.75. Admittedly, you're not at 1.4 or 1.5. You've climbed up a quarter point, and it's going to be hard to give that quarter point up. Why? Because the market's doing the Fed's job. It's building in that hike, that quarter point hike. I can't make it any easier to understand than that. In FXE, you lost the embedded reading. This is how you looked. When you lose that, game over. And did we embed? Let's just check this. Both numbers under 20, under 20, under 20. Take my course, you'll get it. When that happens, magnet time, let's pull this market up towards that, wherever that 18-day average is. And why that average? Well, because it's the closest one on the chart, and see what the market can do. Is it the end of the break in the euro? Well, it's a rally in a market that is still bearish. That is the right way that I can describe it. But I do all that for you in the mornings. I put out a SPDR ETF video every morning. I start recording at 9. I do it at 9 for a reason. How many government reports come out between 7:30 and 9 o'clock? You'll be shocked. That's where the vast majority come out. I want to get them. I also want the funds put their money in the market that first 15 minutes or so. Get the reports out. Now I adjust the chart and I start recording, and it's in your hand 40 minutes later, roughly. And basically, I'm going to review for you 40 some odd charts, specific buy and sell signals. This is general talk. I'm really specific in that. Giving you trade ideas. I'll cover daily and weekly charts, give you long-term, short-term ideas. Give it a try. Just go to our website under the word research. It's all spelled out there. I'm Ira. You have a good day.